a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures gaining for the most part after a sharp slowdown in the U.S. labor market pushed stocks to fresh records. Oil higher now as uncertainties linger around the Iran-Oman shipping deal. President Trump leans on financial pressure as Tehran rejects talks with Washington. All of that as markets look ahead to the latest inflation data coming later this week. Well, the yen continuing to reverse some of those post-intervention gains. Let's get a check on the markets around the world. Here's Winnie Su in Hong Kong for the latest from Asia. Winnie.
Yeah, good morning, Bonnie. Well, as you just mentioned, nothing seemed to be able to really help the yen from weakening further. Now we are seeing the Japanese currency weakening by more than 0.5% today as it inches closer to that 159 level against the dollar. Now we did see a bit of a strengthening on Friday following those softer U.S. jobs data, but we are even also seeing the Bank of Japan's summary of opinions pointing to the upside of inflation risks as well as potentially earlier hikes. But those are not really helpful because investors are betting that the yen would weaken further given that wide gap between the U.S. and Japan's rate differentials. And for now, at least that hawkish tone from the Bank of Japan is being reflected in the bond space as we see the bond yields rising further. Now, flip aboard, we take a look at the broader Asia market a bit more towards the upside, and we are seeing tech stocks doing the lifting while Korean stocks actually underperformed a bit today as investors rotating into the small cap gauge Kosdaq, which is up about 6% today. Now, the onshore stocks are also seeing a bit of weakness as inflation numbers for July really coming through weaker than expected.
Yeah, same for China. Winnie, thank you so much. That's Winnie Su there in Hong Kong. Now let's get over to London for a look at Europe with Justina Lee. Justina.
Good morning, Bonnie. Now, it's a pretty quiet day here today with the STOXX Europe 600 essentially flat and kind of hovering near record highs. The strongest sector today, though, is tech, led by the likes of ASML having a great day. Now, one headwind ahead for Europe is that, with Iran and Oman kind of not reaching a deal yet to reopen the Strait of Hormuz, that doesn't just affect oil, it also affects the transport of those natural gas supplies that Europe is really trying to build up ahead of the heating season. And we can see here that Europe gas futures are up 5% today. Now, that could be a headwind at what has been a pretty good time for Europe lately. Now, if we flip the board here, we can see the Citi Economic Surprise Index for both Europe and the U.S. And we can see here that for the U.S., it's been rolling over, but for the Europe, it's been on the up and up, a sign that European economic data actually have been surprising a lot of economists despite kind of the gains in oil. And that's kind of been part of the reason why STOXX Europe 600 has been reaching record highs as well. But if we do see kind of further disruptions in natural gas supplies, that could be a headwind with the winter coming up.
Yeah, we're off our highs, Justina, but that 58 plus euros per megawatt hour not going to be very helpful to the European market this winter. All right, let's take a look at the United States because obviously we hit a record in the S&P on Friday, even after the weaker than expected jobs report. That said, JP Morgan is upping its price target now to 8,000 for year-end for the S&P 500, looking at better earnings, particularly from the hyperscalers, and suggesting that perhaps we'll see a 35% year-over-year growth when it comes to earnings per share for the entire year. That said, we are basically at JP Morgan's previous target, which was 7,800. As you can see, the Nasdaq 100 futures also pointing to nice gains. That index was up 1.2% on Friday, so the optimism continues apace even after the weak payrolls report. And we are pricing in a little bit less of a chance of a September rate hike now. Russell 2000 futures a little bit lower at the moment. Let's take a look at yields because we held on to those gains for yields. We did see a little bit of bond selling. The 2-year at almost 421 now, the 10-year at 465, and that 30-year remaining elevated at 520. It bears saying in this context as well that oil is higher today with Brent above $84 a barrel. All right, let's get to some individual pre-market movers now. For that, we'll go back over to London and Chloe Melley.
Good morning, Bonnie. Let's start with Berkshire Hathaway, which has bought back about $4.5 billion of its own shares. And this is seen as the company really putting its own cash pile to work. And we are seeing that being received fairly positively by the market this morning. And we're up slightly in pre-market trading. Moving on to TSMC, which has reported a big jump in monthly sales, which is seen, of course, as a sign of sustained AI demand, and is probably quite reassuring as well to investors, given the volatility in the AI sector that we have seen recently. And so we're up slightly. The ADRs are up slightly as well this morning. And finally, space companies are in focus as well today because we have Rocket Lab earnings later today after the close. And so we are up in the green as we await for those earnings after the close today.
SpaceX as well, as you can see, up 2.6%. Chloe, thank you so much. Chloe Melly will be back later in the hour. Also coming up this hour, we'll look at the bond market and the upcoming CPI data with Terry Wizman of Macquarie. But first, oil advancing as a final deal between Iran and Oman to reopen the Strait of Hormuz still hangs in the balance. Tehran also ruling out direct talks with Washington for now. Bloomberg's Abir Abu Omar joins us from Dubai for the latest. Abir, I thought we had an agreement between Iran and Oman. Why aren't we getting the details? Why is it not finalized?
Really good question, Vani. Good morning. Yes, so the deal between Oman and Iran, what we have reported on through the course of last week, is that it is in the midst of getting discussed. Now, there have been some delays. The latest we know from the Iranian side is that the deal is in the final stages of coming to that final line of materializing. We've reported multiple times, of course, on what it will mean for the Strait of Hormuz, the mechanism that will allow ships to start making their way through the Strait of Hormuz. Some details there about outbound ships and inbound ships. But the latest we know from Iran's Foreign Minister Abbas Araghchi is that for now, Iran is ruling out negotiations or wider talks with the United States. He's also said that the repeated violations from the United States on the ceasefire in June hinder any progress in the wider negotiations, that for now, the only talks that are happening are between Iran and Oman on that mechanism that would, according to the Iranian side, only temporarily open the Strait of Hormuz just to get a trickle of this much-needed movement of the oil barrels stuck in the waterway.
What should we read into the fact that Iran seems to be changing up its security team, Abir?
Yeah, so that's another thing that's happened over the weekend, Vani, right? The reshuffling, if you were, in the echelons of power in Iran. What we know, for example, is that Mohammad Bagher Sulghadar, who's a hardliner in the IRGC, was appointed as the political advisor of the Supreme Leader Mujtaba Khamenei. Now, he has come up over the weekend as this key figure who's mentioned some concessions for Iran to reopen the Strait of Hormuz. That includes for the U.S. to remove its naval blockade, for a permanent end to the war, for unblocking of those frozen assets, removal of the oil sanctions. That was not the formal line up until about an hour ago when the foreign minister came up with a statement saying that the United States must end the war permanently against Iran, and some compensation for the violations that have occurred needs to be paid to Iran for the reopening of the Strait of Hormuz. So we're seeing a lot of conflicting statements, even in the minor negotiations that are happening between Oman and Iran, and what exactly it would take for the reopening of the Strait of Hormuz. Now, to answer your question in a nutshell, that appointment or those reshufflings that we've seen over the weekend, we don't exactly know what it would mean for the state of diplomacy between the United States and Iran. Now, that is already not in a good enough place because we don't have any formal discussions taking place, but it does look like it might pave the way for a more hardline approach, if you were, in Iran, which could be a dangerous or could lead to a dangerous and even more dangerous rhetoric in the wider negotiations that are, for the time being, not taking place.
Yeah, as the president said, the U.S. is only semi-negotiating with Tehran at the moment. Abir Abu Omar in Dubai, thank you so much. Staying in the Middle East, Israeli Prime Minister Benjamin Netanyahu rejecting a proposal for disarming Hamas. Netanyahu responding to a roadmap published by the Board of Peace, backed by President Trump.
Israel rejects the 15-point plan. The IDF will not carry out any withdrawal until Hamas is disarmed. And when I say disarming Hamas, it means the heavy weapons, the less heavy weapons, and the light weapons. All of the weapons. And we are talking about real disarmament, not a fictitious disarmament.
Bloomberg's Dan Williams joins us now from Tel Aviv. So what exactly is Israel responding to in the Board of Peace's plan, Dan?
It's responding to some degree of ambiguity around the sequencing, the scale of what would appear to be a proposal for a quid pro quo set of Israeli troop withdrawals in the Gaza Strip in response to Hamas disarmament. This roadmap was introduced about a week and a half ago. Hamas came back with a hedged consent. It said, however, it would only give up heavy weapons. It also tried to front load onto that consent issues of Israeli withdrawals, sweeping Israeli withdrawals from the Gaza Strip, and the foundation of a Palestinian state, something that is well over the horizon when you ask most diplomats in this part of the world. What the Israeli Prime Minister has done is effectively harden the previous misgivings that he voiced into what sounds like an outright rejection. It sounds dramatic. However, it's actually of fairly little consequence, given that in the same breath the Israelis point out that they are not actually part of this roadmap. It is a bridging proposal meant to bring Hamas to disarm as part of the Trump proposal for peace in the Gaza Strip, a movement from the ceasefire of last October to peacemaking and stability and reconstruction and reconciliation with Israel. That vision also requires Hamas effectively to step away from government and to give up its arsenal. What the Israelis are doing is telling Hamas it won't be allowed to do things by half measure. It's telling the Board of Peace that as well. However, no one was expecting any serious movement on the plan before November, when the first new so-called humanitarian pilot is due to open in the Gaza Strip to house Palestinians or rehouse Palestinians who have been in tent cities under Hamas rule. That would be once they are presumably freed of Hamas rule one way or the other. November is a month after the Israeli election in October. It appears Netanyahu has his eye on that and on keeping his right-wing partners on side, given that the idea of an Israeli troop withdrawal really is anathema to that political camp in Israel, certainly as this election race heats up.
Yeah, and you wonder how the asks have changed post-war. Hamas always wanted Israel withdrawal, and Israel always wanted Hamas disarmament. Dan, thank you so much. Bloomberg's Dan Williams in Tel Aviv. Now to other top stories trending on the terminal this morning. Berkshire Hathaway spent about $4.5 billion to buy back its own shares in the second quarter, also purchasing almost $20 billion of equities. The move's signal CEO Greg Abel is putting more of Berkshire's cash pile to work. The firm's cash hoard falling from $397 billion to $365.5 billion in the second quarter. Taylor Farms is pulling more than a dozen prepared food items containing jalapenos from retailers over salmonella concerns. The company says it is no longer sourcing jalapenos from the Salinas, the company flagged as a potential source of a salmonella outbreak. The move comes just weeks after federal health officials tied Taylor Farms to a cyclospora outbreak. The commander of an Air India flight that hit severe turbulence last week is set to undergo a second round of drug screening. India's government is looking to confirm whether he was under the influence of a psychoactive substance. The incident left several passengers and cabin crew members injured. Coming up, AI demand alive and well. TSMC sales up 45% in July. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. TSMC reporting a 45% rise in monthly sales. The supplier for Nvidia and Apple reached $14.5 billion in revenue in July. In a sign, demand for AI hardware remains strong. Joining us now is Matt Bloxham of Bloomberg Intelligence. How on earth, Matt, are these new customers or older customers just buying more? What's going on?
Yeah, I think this is primarily existing customers, continuing to put in big orders to the company. Now, obviously 45% year-on-year growth feels like a big number. It's actually a slowdown from the kind of 68% or so growth they saw in June. But it is significantly ahead of the year-to-date total, which is kind of around the 35-36% year-on-year. So momentum is really strong. I don't think this is a big surprise to the market because it's only a few weeks back that they raised full-year guidance on a dollar basis to more than 40% growth. The previous guidance was about 30% growth, and they raised their capital spending plans to kind of match the demand they're seeing. So I think this strong strong print is consistent with what we've heard from the company recently and reflective that near-term demand for AI, compute, and all the chips that go into that is incredibly strong.
Yeah, those capex plans, they're now looking at $60 to $64 billion this year. Is that in Arizona, in Taiwan? Where are the details for us?
Yeah, I don't think they kind of gave so much away when they gave that guidance, but I think it is across their full capability. Yeah, obviously, they are investing substantially in Taiwan, but they are also investing heavily in the US to kind of match that Made in America tag that the administration is going for. So I think that incremental spend is coming across a number of regions.
Matt, CXMT, the Chinese chip maker that rose 500% after its IPO, Apple looking to use it now in China. Is that a major customer for CXMT, or had Apple already been a customer?
So I think potentially Apple could be a major customer for them. I mean, it's interesting that Apple is looking to source local supply for chips for its major products. I think that's partly a reflection of the constraints on global supply for the technology they need, partly also that perhaps geopolitical sensitivities mean they might need to source some components locally. But supply is constrained, so I think their ability to tap into this company as a near-term supplier could be limited because that company is prioritizing local Chinese manufacturers. So I think this is perhaps more of a long-term play for Apple, recognizing that they need to continue to diversify their supply of key components across the globe to make sure they can meet demand wherever it is.
All right, Matt Bloxham of Bloomberg Intelligence, thank you so much. And staying with China, Beijing has been ramping up efforts to challenge U.S. dominance in AI by marshalling the power of its $28 trillion stock and bond market. Bloomberg's Lucille Liu joins us now for more. So I just mentioned it there, CXMT rising 500% in the few hours after its IPO. What's the significance of China now really beginning to use the heft of its capital markets as a policy tool?
Yeah, absolutely, Bonnie. It's really quite an extraordinary story, of course, CXMT displacing, the Industrial and Commercial Bank of China as the mainland's most valuable share when it listed. And of course, that we know going into that listing, there was this, tech sell-off that was sort of threatening to, ruin the momentum. And that's when Beijing intervened with, one of its broadest rescue efforts in years. And now we know that from people familiar reporting that, CXMT's debut was actually a factor in that decision to intervene. So, this combined with sort of these efforts to fast-track IPOs, to encourage, banks to back these science and technology bonds, it really shows Beijing's shifting strategy on how to finance its tech push and its AI push in particular. And so by leveraging, those household savings at $26 trillion at this point, it's the world's largest pool of household savings. Beijing is really looking to close that gap between U.S., tech listings, which really dwarf kind of what China has had in the past years, and really try to push forward in this AI tech race.
Yeah, a data point that really struck me was that Chinese tech firms have raised $217 billion through IPOs. For every dollar they secured, U.S. peers raised more than $6. But that's not that wide of a gap given where we're coming from. Can I ask you about the economy too, though, because we are starting to see a little bit of disinflation coming back into the Chinese economy. How concerned will policymakers be?
Yeah, over the weekend, we did have those CPI, PPI figures. Of course, we've seen this in June a little bit, but now it's become very obvious, as the oil shock sort of fades, China's deflation is, coming back into the picture. So for producer prices in particular, this was the first time since March that we've seen a slowdown. Both are still in expansion territory, but they are slowing, and they did slow much more than expected in July. So, analysts are saying, the deflation pressures are coming back, and especially sort of, as the oil shock fades in this post-oil shock era, having healthy inflation is still, a long ways off. So We did have that Politburo meeting last month, and policymakers did sort of open the door for stimulus, although they didn't actually introduce any measures. So we are looking for that in the second half of the year.
Lucille, thank you so much for that update. That is Bloomberg's Lucille Liu in Beijing. Coming up, a look at what's making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York, and it's time now for your front page news. First up, the Washington Post reporting the Pentagon is pressing defense firms to rapidly escalate the production and delivery of weapons as the war with Iran depletes stocks. Deputy Defense Secretary Steve Feinberg has given industry leaders no more than 21 days to submit plans to drive faster delivery schedules. Next up, the New York Times reporting on President Trump's appointment of Will Scharf as White House counsel. Scharf, according to the Times, a deeply conservative lawyer, the current staff secretary. The Times says Scharf has embraced most extreme elements of Trump's agenda, but has thrown up flares over matters he believes could imperil the presidency. And finally, the Financial Times leading with China's shipping group Sea Legend starting a weekly service through the Arctic as an alternative to the world's traditional shipping routes. The route, branded the Ice Silk Road, will cut in half the usual 40-day sailing time between China and Europe as melting polar ice shortens the journey. That's your front page news. Coming up, we're going to speak with Thierry Wizman about Friday's non-farm payrolls report and the Fed's journey. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures gaining for the most part after a sharp slowdown in the U.S. labor market pushed stocks to a record. Oil higher as uncertainties linger around the Iran-Oman shipping deal. President Trump leans on financial pressure as Tehran rejects talks with Washington. All of that as markets look ahead to the latest inflation data coming later this week. So let's take a look at those markets then, and bear in mind oil is higher with Brent above $84 a barrel now. So you have S&P futures continuing to climb. We're basically at JP Morgan's old target, and that's interesting because they just raised their S&P year-end target to 8,000 now on a strong earnings season, faster AI monetization, they say, and also revising their full-year earnings estimates higher, implying a 35% growth rate year over year. The Nasdaq 100 was up 1.25% on Friday, up another 0.5% in terms of futures today. Russell 2000 may be the laggard today. Let's take a look at yields because we're repricing a potential hike in September, but we're still at a 45% chance. That two-year yield almost at 4.21, the 10-year yield holding on to 4.65 even after we had a bit of a sell-off on Friday, and the 30-year yield very close now to 5.21, creeping ever higher. For some stocks to watch now, let's get over to London and Chloe Melly.
Good morning, Vonnie. Berkshire Hathaway has spent about $4.5 billion to buy back its own shares. And this is the company essentially putting its huge cash pile to work. Some analysts are also saying this is a way for the CEO to really take the helm and assert himself. And so we are seeing this being reacted to quite positively by the market. And we're up about 0.5% this morning for Berkshire in pre-market trading. We are also moving higher for TSMC. The ADRs are in the green this morning after the company reported a big jump in monthly sales. Of course, this is seen as quite reassuring for investors in the AI trade, given all of the volatility and the investor fears around AI overspending that we've seen in that sector lately. So we're up about 0.3% there. And finally, space companies are also in focus today and moving quite a lot higher. Both SpaceX and Rocket Lab are definitely in the green this morning, ahead of those earnings from Rocket Lab later today after the close. Both of those companies, this sector in general, is really benefiting from those rising investments in space programs and space defense as well. And so we have quite a lot of enthusiasm around that industry today.
Back up to 137 and change on SpaceX. Chloe, thank you so much. Chloe Melly there. Fed Governor Lisa Cook has warned on inflation just in the last week as we await the latest print on Wednesday. She said, quote, with 5 years of above target inflation, the risk grows that higher inflation may become entrenched in price and wage setting behavior, leading persistence that would be much harder for us to attack. Terry Wizman of Macquarie weighing in, writing, quote, "We believe that the median FOMC voter will drag Kevin Warsh to accept a rate hike likely in October." I'm pleased to say Terry joins us now at the desk. He's Global FX and Rates Strategist at Macquarie. Now, that was before the non-farm payrolls report, Terry. Did the weakness in the labour market cause any change to that outlook?
Yeah, well, let's start with the premise of your question, which is that the employment report was weak. It was weak in the sense that non-farm payrolls were negative. It was not weak, certainly, in the unemployment rate, right? We went from 4.2% to 4.1%. It's important to keep in mind that 4.1% is below where the Federal Reserve itself, in its summary of economic projections, believed that the unemployment would be at this time of the year. They thought it was going to be closer to 4.3%. So in that respect, the labor market may actually be tighter right now than the Fed anticipated a few months ago. That's important to keep in mind. The other thing that's important to keep in mind is one of the reasons why non-farm payrolls was weak, and in fact it was weak, it was a negative number, about negative 23,000, is in part because we have lower labor force participation in the U.S. That was evident in the household survey. It's been falling, and therefore people are leaving the labor market. And of course, that's going to put downward pressure on the non-farm payrolls. So will the administration's immigration policies. I'm more inclined to just look and see what the unemployment rate is doing. In effect, the Fed has to be looking at unemployment. That's part of their dual mandate, not employment growth. So from that perspective, it wasn't a very dovish report.
So great points. The only thing is it's not just the unemployment rate, right? You have to look at the declining wage growth.
That's right.
You have to look at the supply. So if the supply isn't there, then maybe it's a different number that we need in order to keep the U.S. economy, ticking along in terms of the labour market. And so do we even know what a weaker labour market looks like these days?
It's very tough admittedly, it's very tough to say what a weak labour market looks like. But that's exactly why the Fed and economists don't necessarily look at the quantity of labor and the things that we measure through the establishment survey, how many jobs were created. It's always important to look back to prices because those are the best signal, of course, of how tight something is. It's standard economics. If something is tight, of course, the price will go up. If it's loose, if the market is loose, the price will go down. That's another signal that the Federal Reserve should be using. If it does, I think it's inclined to still hike. Now, will it be September? I don't think so. I had said before the report that it was likely to be October. But that was because we had to wait until the October meeting to see the revisions in the personal consumption expenditure price index. Those are going to be revised 12 months with a 12-month look back. Now, with this ostensibly weak employment report, is it possible that we will not get a majority on the FOMC to hike in October either? Yes, that's possible. December doesn't look like the wrong time to do it, of course, either, because we have a new summary of economic projections, and the Fed likes to make bold moves or change the direction of policy, concordant with the release of the dots and the SCP. So December is certainly a possibility as well.
Not that the midterms would have anything to do with it, but of course they would be out of the way, which also wouldn't hurt at the margin, right? So Terry, if that's indeed the case, you're assuming that a hike is the next step, that we will need to get inflation under control. What if the CPI data comes in a little benign?
Look, it's altogether possible that the CPI number comes in benign, but even if it comes in a little bit benign, if you look at let's say the four important measures that the market looks at, which is core CPI, headline CPI, core PCE price index, and headline PCE price index, three of them are above 3% on a year-over-year basis. So it would have to be a dramatic reduction in year-over-year inflation for this to really change the zeitgeist at the Fed, which has been very well articulated by some of the dissenters. They don't point to just inflation being high recently. They point to inflation being high for the last few years as the narrative that's compelling them to hike.
Yeah, it has been a long time, and it does feel like the voices are getting more vociferous as we're getting less forward guidance. The idea that long-end rates have been creeping higher and that's a concern, why are people surprised? I mean, the market obviously was a little bit surprised because it's repricing, but many of the top hedge fund managers have been waiting for long-end yields to rise because of our fiscal situation.
That's right. The fiscal situation is part of this. The fact that the U.S. can't seem to get, in many countries, in fact, I shouldn't single out the U.S. here, cannot get their debt under control, and that they are looking towards several more years of heavy bond issuance should be something that should depress the price now. You certainly would not buy something today if you believe that the supply is going to be large in the coming few years. So I do believe that at least perceptions about the deficit play a role, but so do perceptions about growth. I mean, one can make a case that if growth is going to be high and productivity is going to be high, real rates of interest should be high to enable consumers to save more and not spend today. And also we have a situation where, although in the surveys, not all the surveys are pointing to high long-term inflation expectations, but some of them are. And of course, if you're holding nominal bonds and it's an inflationary environment, structurally, those are no longer as attractive as they used to be. So there could be a complex of three reasons why long-term yields are high. I like to think that a lot of this has to do ultimately with the structural trend behind inflation. There's a lot of things globally that are creating inflation. Deglobalization, demographic changes, climate changes, et cetera. And although we might get a productivity boost from AI, it's not clear that it's going to manage to offset all of the other inflationary forces that are out there.
Or how fast it will come, and we'll see the results of it. Terry, I have to ask you the outlook for the dollar among all of this. The Sell America trade was sort of trying to creep back in again at the same time, you know, with the war in Iran and oil prices and so on. Disinflation in China. I mean, there's a lot of challenges out there.
There are. And I think the key thing right now is in the short term is the price of oil, maybe even in the medium term as well. Because what we have seen during the war, i.e. from late February into early June, late May, was that high oil prices were actually good for the dollar. And that makes a lot of sense, as I keep repeating, because the U.S. is a net exporter of basic energy. When the thing you export, when its price goes up, you benefit. Incomes actually benefited in the U.S. Real incomes benefited in aggregate from that oil price increase. So in the meantime, right, if oil prices stay high and it compels the Fed to raise rates, because it's certainly part of the picture for them, I think the dollar will be, let's call it robust, steady. Okay. Looking into next year, though, if oil prices finally fall, we get on the other side of these French elections, and the dollar falls out of favor in large part because this war has been seen as something that has debilitated the perception of the U.S. around the world. Yes, then we can come back to that diversification trade next year.
Well, we will have many conversations before then. Good. Terry, thank you so much for your trip into studio. In particular, that's Terry Wizman of Macquarie. Now to other top stories trending on the terminal this morning. Russia says 13 people were killed in a Ukrainian attack on a Tatarstan energy hub. The large-scale drone assault targeted industrial sites and residential areas, according to local officials, and left 40 people injured. Paramount has agreed to sign contracts with major theatre chains, guaranteeing it'll release 30 movies in theatres this year if it acquires Warner Brothers. Bloomberg learns that AMC and Cineworld's Regal Cinemas have been offered 3-year agreements, which state the movies would remain exclusively in theatres for 45 days and unavailable on streaming for 90. And U.S. wheat futures jumped to their highest in more than a week on concerns shipping disruptions in the Black Sea will create supply shortages. Turkey has temporarily halted its Black Sea transits over heightened security risks brought on by the Russia-Ukraine war. Ukraine has also stated that Russian attacks could cut exports of its agricultural products in half. Coming up, Iran and Oman remain short of a deal to reopen the Strait of Hormuz. We'll get the latest out of the Middle East. This is Bloomberg.
At present, we are not engaged in any negotiations with the United States. As long as the American violation of the Memorandum of Understanding continues and the U.S. does not make amends for its violations, there is no possibility of resuming negotiations.
Iran's foreign minister ruling out direct talks with the U.S., adding that an agreement with Oman to establish a shipping route through the Strait of Hormuz is, quote, very close. Bloomberg's Abir Abu Omar is back with us from Dubai. A little bit of a change in tone from Arakshi, who had always been the one to be reaching out and to be putting a positive tone on things. Abir, what has changed here?
Yeah, good morning, Vani. You're right. I mean, and even over the past hour or so, we have heard from the foreign ministry asking for compensation from the United States and a complete end to the war before they consider even coming back to the negotiating table. So you're seeing some reshuffling when it comes to the echelons of power in Iran. Over the weekend, we've reported on a few individuals who've reshuffled in the wider cabinet. That includes Mohammad Bakr Zulghadar, who is a hardliner, known hardliner in Iran. He accepted the new position as a political advisor to the supreme leader, Mujtaba Khamenei. Now, this is someone who has said over the weekend that in order for Iran to come to the negotiating table with the United States, that the U.S. needs to end the war permanently, lift the U.S. naval blockade on the Strait of Hormuz, unblock those frozen assets, oil sanctions removed. So a return really to some of those concessions that we have spoken about during those MOU negotiations back in June in Switzerland. Those had obviously left the window, Vani, when we started discussing the Strait of Hormuz and reopening the Strait of Hormuz. And this is still front and center. I mean, it's noteworthy to mention here that while we have seen a return to a kind of harder approach when it comes to Iranian officials bringing those requests to the table, front and center remains the Strait of Hormuz and the negotiations that you mentioned with Oman to establish some kind of mechanism to get a trickle of movement through the waterway. We understand that those negotiations between Oman and Iran are in the final stages. A formalized draft is yet to be here. We will be able to better determine just what exactly would happen to the physical movement of those oil barrels once we see what the formal statement from both sides looks like. For the time being, threats in the Strait of Hormuz are still very much there. The latest we know is a ship of ADNOC, the UAE oil company, that was attacked in the Strait of Hormuz over the weekend, killing one individual and injuring over a dozen people. So that threat that exists in the waterway is still very much there and is still at the top of mind for a lot of the countries in the GCC and then a lot of the ship owners that are trying to make their way through the Strait of Hormuz, even with their lights switched off.
Yeah, thousands still stranded of sailors. Abir, thank you so much. Abir Abu Omar in Dubai. Turning to tech, TSMC reporting a 45% increase in monthly sales, revenue reaching $14.5 billion as the Taiwanese chipmaker benefits from the global AI build-out. Let's bring in Matt Bloxham of Bloomberg Intelligence for more. So, Matt, another whopping sales figure. Is it existing customers buying more, promising to buy more, new customers?
Yeah, I think this is largely existing customers coming through with demand. You know, the TSMC is the supplier to a huge range of companies, notably NVIDIA and Apple. So I think this is reflective of the amount of demand those companies are seeing for their products and services. It's a bit of a slowdown from the June month, which grew something like 68 or 69% year on year, but it's still well ahead of the year-to-date growth, which is around 35, 36%. And you're not that surprising that we've seen another strong print, given that the company not so long ago raised full-year guidance for revenue growth. So in US dollar terms, looking now to grow 2026 revenues by more than 40%. The previous target was around 30%. So momentum is really strong, certainly near term for TSMC.
Sony back in the headlines. It's teaming up with TSMC now to build a $6.4 billion plant, a Japanese sensor plant. What would that be for, Matt?
Yeah, so I guess as you see the AI environment evolve and we get into physical AI, where you've got lots more robots, you've got autonomous driving, sensors is going to be a massively important part of how these bits of hardware communicate with each other and with the wider internet. And so I think along with a number of companies, both TSMC and Sony, seeing that they need to build a lot of capacity, both for their own products, but for the kind of broader market. So this year wouldn't come on stream for a couple of years, but is anticipating that big surge in the need of sensors for all of these AI products that are yet to come onto the market.
Matt, I want to ask you about the CXMT story that the Wall Street Journal is reporting out. Apple potentially taking on CXMT semiconductors for its products in China. This could be the beginning of a whole new relationship, not just for Apple, but for other companies too, potentially, no?
Yeah, it could also, with the geopolitical tensions, we're seeing, quite a polarization and a fragmentation of what used to be a global supply chain. Obviously, there's huge shortages for things like memory chips, and I think Apple here is looking to secure more of a strategic midterm local supply for some of that essential technology. I don't think this is going to make a big difference near term, because from what we've heard, CXMT is already maxed out on this year's supply and is prioritising local companies such as ByteDance and Tencent. But they do have plans to significantly increase their manufacturing capacity over the next couple of years. So I think that could create an opportunity for Apple to kind of get some of that supply.
And interestingly, CXMT eclipsed ICBC to become the largest market cap company in China after its IPO just recently. Matt, thank you so much. Matt Boxham of Bloomberg Intelligence. Now to earnings, and Berkshire Hathaway's in particular, its latest report revealing it spent about $4.5 billion to buy back its own shares and also purchased nearly $20 billion of equities in the period. The increase in capital deployment signaling CEO Greg Abel is putting more of the firm's cash pile to work. For more, Bloomberg's Tom Metcalf joins us now. Tom, we're making a lot of this, but it's essentially a tiny, tiny portion of the cash reserves. Was it more of a statement that Greg Abel isn't afraid to make decisions, or is it really a belief that, Alphabet is worth, a couple of extra $1 billion in an investment at these prices?
Yeah, no, that's absolutely the right context. We're talking about a company here in Berkshire which has something like, close to $400 billion to deploy. So, whatever they're doing, broadly speaking, is fairly marginal until they really bring out the bazookas, whether on the buybacks or, perhaps on some absolutely ginormous mega deal, which would probably transform markets. But, there's some interesting sort of signs here. You've got a $4.5 billion buyback, shows, look, he's not afraid to, pull that lever. And then, of course, in terms of where they're putting a bit more money in their equities book, yes, Alphabet, an insurer, and sort of the other 5 to 10 billion. We're not actually sure where it's gone yet. But I think the most important thing to remember is if you're hoping for Berkshire to really spend, down its cash pile, we're going to need to see a lot more kind of big swings than we've seen so far.
Yeah, still interested in Japanese companies. They were involved in the brokerages, and this deal was an insurance company. And also, of course, we can't forget the Taylor Morrison acquisition. That was a pretty big acquisition.
Yeah, exactly. That's an interesting one where they're, buying into the US house market. Again, it's a nice sign of what maybe Greg Abel's trying to do, in that, he looks like from that acquisition, he's trying to kind of almost make a vertical provider. He can go into the insurance, the financing, obviously do the house building themselves. And that's what some analysts are saying is actually, maybe that's how he'll leave his imprint on Berkshire Hathaway, is a bit like under, Berkshire Hathaway Energy, where effectively those companies all spoke to each other or were really aligned. In other areas of Berkshire Hathaway, these operating companies are effectively independent entities. And perhaps this is a signal that Abel sees, hey, there's a way we can kind of push synergies, get everyone much more kind of closely aligned and talking together to each other even, and that would be a way Berkshire is sort of transformed under his tenure.
All right, looking forward to more. Tom Metcalf, thank you so much for that. Coming up, we're going to get you set up for your trading week. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week that we know of. First of all, we get tech earnings from CoreWeave and Supermicro. They're coming tomorrow. Then on Wednesday, the market will be looking at CPI data, followed by PPI and jobless claims on Thursday. And we get some more Fed speak this week from Beth Hammack and Tom Barkin throughout the week. Let's take a look at your macro picture as we head into a Monday following an S&P record Friday, by the way, with JP Morgan today upping its price target on the S&P to 8,000 from 7,800. Brent crude is above $84.50 a barrel now as things look just a little bit more fragile in the Middle East. Maybe talks breaking down or not happening. Nasdaq 100 futures, though, pointed higher. They're off their session highs, but nevertheless, after we saw that gain of more than 1.2% Friday, looking to continue those climbs today. The two-year yield also holding on to its elevation there at 4.21 after Friday's non-farm payrolls report. The market's still digesting that. That's it for Bloomberg Brief. Surveillance is next.